Several things could happen in the few weeks leading up to launch, in my opinion. In fact, I am not very confident about what will transpire in the weeks leading up to launch. I believe the impact of this influx of capital will become apparent in months 2, 3, 4, 5, and 6. By year's end, I predict net flows of $5–6 billion, and I predict they could accelerate in 2025. The few weeks leading up to launch, though, will be a fascinating time with plenty of changing variables, and investors should be ready for that. In the grand scheme of things, $15 billion is going to pour into these ETFs, driving prices to new record highs, a very strong outlook on earnings per share EPS for US-based spot Ethereum exchange-traded funds, and the underlying cryptocurrency was recently expressed by Bitwise CIO Matt Hougan. Hougan predicts that in the first 18 months following listing on the Ethereum exchange and permission by the U.S. Securities and Exchange Commission, the net flows for Ethereum-traded goods will reach approximately $1.15 billion, according to a thread uploaded on the X social media platform. Hougan estimates that investors will allocate equal proportions to Ethereum's and Bitcoin's ETFs based on the proportional sizes of their respective market caps. He points out that Bitcoin's market cap accounted for around 74% of their total market worth. Ethereum, on the other hand, held 26%. Hougan elaborates by saying that $1.56 billion is already invested in spot Bitcoin ETFs by U.S. investors. He predicts that number will rise to $100 billion by 2025 as these ETFs progress through maturity and get certification from platforms like Morgan Stanley. This line of thinking suggests that $35 billion in managed assets would be necessary for the Ethereum ETF to achieve parity. Hougan warns, meanwhile, that Ethereum ETF may encounter obstacles that make it impossible for it to catch up to Bitcoin ETF. On the grayscale side, there's the Ethereum Trust ETH, which, if greenlit, would turn worth $1 billion. After deducting this amount from $1.35 billion, Hougan arrives at a likely AUM for the Ethereum ETF of $1.25 billion. When he takes into account the market shares of Ethereum ETF in Europe and Canada, where it holds 22% and 23% of the market, respectively, instead of his original 26% estimate, he further reduces this estimate, using the 22% in Europe as a stand-in. According to Hougan, the anticipated net flows will be $1.18 billion, down from $1.25 billion. The reason I wrote my piece was because I was annoyed, not by Galaxy and Alex's actions, which I found admirable, but by many of the social media opinions I read, in which people were simply speculating and making absurd claims, e.g., it will be zero, it will be $100 billion, etc. There are places to begin. Therefore, I zeroed down on two sets of foundational elements. The first is the simple comparison of Bitcoin's and Ethereum's market caps. The fact that nobody even noticed that is unbelievable to me. In fact, I was chatting with an advising company with assets of over $100 billion when I decided to take a look. They were uneasy with Bitcoin alone and wanted to diversify right away, which was the first thing they told me. If they could put up a diversified basket, they could trust their advisors more with the allocation. It hit me like a ton of bricks that the market cap weight, which is currently approximately 3.2. 1 will be the starting point for many investors. These days, there are those who would rather have Bitcoin than Ethereum. The market cap is the naive starting point, however, there are valid arguments on both sides. Thus, the initial point was made. After that, I remembered that the ETH and ETP markets aren't the same as the US market. For example, the European and Canadian markets are different. Although they function in a slightly different manner, those ETP markets are not entirely unimportant. Okay, then we'll go global. Additionally, the AIM was nearly in sync with this market cap weight when I examined it. I can see why it was slightly lower after all. Bitcoin was first, and some people may simply want to tick the box and go on. Their asset turnover, however, was 22% to 23%. After that, the maths is relatively straightforward. You make it. From my vantage point, the figure I arrived at over the subsequent 18 months was $15 billion. However, the more basic conclusion is that, indeed, these ETPs will have substantial demand. The amount I'm incorrect by might not be zero, but it could be billions of dollars. It won't be 100 billion. In certain ranges, it will be highly substantial. 10, 15, and 20. Launch is the part that makes me the most nervous, since I don't know how quickly Ethereum will be able to be sold and if there will be large net outflows that could temporarily outweigh inflows. I have no idea what the outcome will be. That didn't occur with Bitcoin, but I believe that people have finally come to terms with the fact that trading is going to happen, and they will make that exchange. Therefore, it's possible that they speed up the process of making that switch. Plus, there are two distinct categories of investors, aren't there? Investors who are looking to go long on Ethereum ETH will likely unload their more expensive holdings and switch to Bitwise and Galaxy goods. Then there are the arbitrageurs who have purchased ETH at a discount to its net asset value in the hopes of making a profit. They are holding off on leaving the ETH market until the discount goes away, in the event of a conversion, so they may hedge their bets. The question then becomes whether fresh investors enter quickly enough and whether those individuals leave. Therefore, I believe that many things can happen in the few weeks leading up to launch. In fact, I am not very confident about what will transpire in the weeks leading up to launch. In my opinion, the impact of this influx of capital will become apparent in months 2, 3, 4, 5, and 6. Net flows could likely reach $5–6 billion by year's end, and I predict they'll continue to grow in 2025. I should mention that Bitcoin had a brief period of selling after its inception, but then it surged to new all-time highs. Once again, I just don't think that would occur if I were to conduct a base case study. I anticipate that there will be an influx of new investors sufficient to counteract it. The few weeks leading up to launch, though, will be a fascinating time with plenty of changing variables, and investors should be ready for that. In the grand scheme of things, $15 billion is going to pour into these ETFs, driving prices to new record highs. Plus, I believe that will transpire very soon. Additional interview clips are available here. In my opinion, Bitcoin can teach you a thing or two. This was covered in a recent report by GSR. They discussed how the initial $15 billion or so invested in the Bitcoin ETF effectively 2.5 times the price of Bitcoin. Starting in October, when the Bloomberg team realized we were getting a Bitcoin ETF, they deliberated on it until today. Am I correct? When that happened, Bitcoin was worth about $27,000. Consequently, they are factoring in the entire increase in value, which is, in my opinion, a fair assessment. Since these ETFs were universally pessimistic up until about 2 weeks ago, our time horizon is substantially narrower. We are simply factoring that estimate in at this point. How about the same effect? We are currently analyzing the situation, so you're keeping track. You're catching us in the middle of our research on how these inflows will affect the price of ETH. I can see how it could be argued that it could be stronger. The argument rests on the fact that Bitcoin is now experiencing net new supply while Ethereum is practically devoid of it. There are two groups of people in the market, in my opinion, those who have to sell and those who can sell. In Bitcoin, the sellers are the Bitcoin miners, who have absorbed part of the demand from Bitcoin exchange-traded funds. Here, net issuance is close to zero. The exact amount varies per time period, but it has been close to zero for the most recent times. Only those who aren't obligated to sell can sell ETH to these ETFs. A higher degree of price reflexivity may so result. Assuming these flows materialize, I'd put my money on fresh all-time highs. File for Sol ETF and Solana ETF. When I heard it, I was curious to hear how you all felt. To some extent, it's intelligent. Two things are important to note. First, VanEck is an excellent company. The firm is friendly with me. A few of their products have us as investors. Two pieces of information are pertinent. A parallel regulated futures market is necessary for the approval of any commodities ETF by the SEC. Both the unregulated Bitcoin futures market and the regulated spot Bitcoin ETF exist. There isn't a regulated Solana ETF, but there is this ETF that might be part of a regulated market for gold products that have been approved by that reference. So it goes against the grain of ETF precedent. Furthermore, a new CC commissioner would likely take office around the middle of February, which falls inside the 240-day window that the SEC has to examine these applications. Regarding that filing, I see those as the bull and bear sides.